Very good evening to everyone joining us today on our Corporate Connect webinar. This webinar is organized by SIAS and proudly supported by SGX Group. My name is Sunny and I'm from SIAS and I'll be your host for today. So for this evening webinar, we will welcome Trendline Groups as well as our audience from our YouTube live platform. Trendline Groups is an investment group focused on high potential innovations in the agri-food and medtech sector, supporting companies from seed stage through to market entry. With operations in Israel and Singapore, Trendlines combine capital, deep technical expertise, and global partnerships to develop impactful technologies, empowering entrepreneurs to create sustainable long-term value for investors and shareholders. We will kick off today's webinar with a market highlight, followed by a corporate presentation by the Trendline Groups. Thereafter, we'll dive into the Q&A segment. But before we dive deeper and talk about more on Trendline Groups, let me welcome Mr. Kai-Jin from Mumu, who is the senior market analyst over there, to take us through some of the market highlights and updates that's happening in the market right now. Over to you, Kai-Jin.
Hi, thank you, Sunny, and good evening, everyone. My name is Kai-Jin. Give me a while as I share my slides.
Sure. Great to see you again on the Corporate Connect session.
Nice to see you too. Okay, so yes, for those who have are seeing me for the first time, my name is Kai-Jin. I'm a senior analyst in Mumu itself. And today I'll be covering in terms of the overall market highlights as well as some of the developments that's happening. So yeah, without further, let's begin. So for the highlight itself, I'm going to talk about globally what have happened and what can we expect moving forward as well. So for this week itself, talking about the US, wrapping up towards the end of the year, the indices across the US market itself is actually closing higher for the third time consecutively, the third fiscal year consecutively in that sense. That said, for the week itself, we do see the performance coming in, the performance coming in relatively muted as market participants are actually awaiting for the Fed decision making. Actually, I think it will be tonight itself. So this is also because the US inflation has remained relatively sticky along with the labor market weakening to a certain degree. Sector-wise, what we can observe is the energy, tech, as well as the industrial being the leader for the week itself. They are up about 2.9%, 1.8%, as well as 1.5% respectively. On the earnings side of things, or what is keeping actually the market afloat is actually basis of the existing earnings from at least majority of the company under the SPX index. 495 of them actually come out with their earnings reported, and out of which 83% of them actually beat earnings. However, one thing, if let's say, as we go down the top-down approach method, looking down in terms of social economic down the line, socially in terms of the entire society or the entire labor market, MIT has actually come up with studies to actually try and determine the impact of artificial intelligence, which is a key component, or I would say a key concern about from many individuals that is actually entering the workforce itself. So what I mean by that is because a lot of them are fearful in the sense that AI can actually replace their job via automation, etc. So iceberg index is actually a kind of like an indicator. It's still, I would believe, it's still a work in progress thing. The number is coming at about 11.7%, and what this means is that approximately 11.7% of US labor can actually be replaced by AI. Like I mentioned earlier, the data is still relatively fresh and new. I believe more tweaking is required for things to be really finalized to a certain degree. So at least at this current stage, do take it a pinch of salt, but do keep an outlook on them in that sense. So this is pretty much the heat map about how the market has relatively performed for the past week itself. The day before, market, like I mentioned earlier, has remained relatively resilient. Performance has been relatively mixed in that sense. But that said, to a certain extent, market is still very, very sensitive towards earnings. And I think this can be observed in recent times, whereby if let's say a certain company corporate earnings has actually beat certain analyst estimates, we can see share price jump, vice versa. And this can be taken into account in that sense in terms of the overall performance. So looking next, we have the Chinese market itself. Broad indices have actually outperformed the US counterpart, closing way higher actually towards in terms of the year to date wise. Hang Seng Index is up 30%. The Shenzhen Composite is also up approximately 16.5%, while the Hang Seng Tech is up about 26 or so. Similarly, for the week itself, the equity indices is relatively muted as they are also awaiting for the Chinese government side of things to actually come out with terms, not just the economic data side of things, but also the government policy direction in that sense. I think many of us here, we do know that to a certain degree, the Chinese market is actually very dependent on the policy that is given or initiated by the government itself. So to a certain extent, yeah, we are waiting alongside the US investors for further updates. Let's say moving ahead, what we can expect next year is China still do expect a 5% or approximately 5% growth, at least within the economy. And this can also tie in together with the next 5-year plan, their 15th 5-year plan. So which will be happening between the year 2026 to year 2030. As of now, the general focus is still within the tech innovation as well as economic quality. But I would say further clarity can be observed at least in the coming year, sometime around March 2026. So back at home, ST has actually delivered a very healthy return, about 19.6%, something very attractive for a lot of our investors here. However, the index sit in line with, I would say, the broad regional performance is that it's still muted, up only about 0.6% for the week. As a Singaporean investor, we tend to be a little bit more concerned with what's going on around the world. So that's one of the reasons why. So economically, looking at the economics itself, we can do see that there is some form of healthy activity that's going on. PMI has actually edged up about 0.2 to the data of 15.2 coming in November, the fourth consecutive month, largely driven by AI manufacturing as well as AI-oriented equipment production in that sense. So this would, I would say, to a certain degree, signal certain expansion that is ongoing in the economy. On the corporate side of things, updates on the EQDB. Out of the 6 different fund houses that's been funded, 2 of which are Nova as well as Eastspring. For Nova itself, they actually have plans to come out with 2 new funds, basically focusing on the small to mid cap range, by at least Q1 2026. Similarly, Eastspring is also coming out with their own fund with a focus on income and growth via the local equities. So this is pretty much the heat map to indicate the recent performance. Very similar in terms of what you can observe in the global indexes, like or for example SPX, which I shared previously. Market is relatively muted, or would say in terms of the overall performance, relatively rather mixed in that sense. So looking at the geopolitical landscape, right? It's kind of like similar to what I shared last week. Ongoing geopolitical tension, especially within the China and Japan itself. One thing to take note of this week, what changed from last week was that I think things escalate a little tougher, further escalation at least past what we have seen at least in the past decade itself. There is increasing military build-up from both nations. So I think that is a concerning event. I think that investors should keep a lookout. However, that said, looking at the silver lining, we can actually observe Malaysia to actually benefit from this. And why I say that is because those tourists that is meant to visit Japan actually redirected their flights to Malaysia or Penang, for example, as their holiday destination. So to a certain degree, the tourist industry and the service sector within Malaysia does see a slight boost. The second thing is actually Ukraine-Russia conflict. Mentioned last week that we do see some conviction towards resolution. However, as per the recent meeting, that kind of dissipated slightly. So we should still continue to monitor as they have an indirect impact towards energy as well as food security. Last but not least, I think in terms of these two tension and conflicts, actually points down to one, I would say one factor that we really want to focus on as an investor is in terms of looking at what should we be investing next is the increasing protectionism globally. What I mean by that is that given that supply chain has been disrupted, potentially being disrupted, a lot of countries are actually moving a lot of this supply chain locally back home, or I would say domestically in that sense. So they tends to want to ramp up in terms of their resources to reduce any form of vulnerabilities in the event of such as like pandemic or tariff that actually has taken place. So next thing, I think tonight, I think a lot of people are actually monitoring, or I would say, anticipating this. Rate cut probability is currently at about 87% up from the month before. Despite the expectation of a rate cut, the Fed currently still do remain relatively, I would say, cautious. Even though there is a difference in view within the board itself, largely because of the gap in the data that has been released. There is still ambiguity to a certain degree. Things is not really crystal clear. They are taking a lot of things more towards as a reference point in that sense. So this is something that we should keep a lookout at least in the near term before the year end. So looking in terms of the overall asset class, towards the end of the year, valuation has been very, I won't say very high, but it's relatively high, at least towards their longer term end of things. That said, to valuation is high is largely because it's driven by positive earnings. So this is what actually keeping the market afloat to as of today in itself. This is also because the overall market sentiment has been relatively dovish. People are already a bit more cautious and a bit more I would say risk averse to a certain extent. So most of the major indices, as we observe within the developed market, actually perform relatively well, and as well as their valuation within the top end of the range. But looking ahead, if let's say we were to look for opportunities, we still can find some, at least within Asia, like such as like China, Korea, Malaysia, as well as like Thailand. So moving ahead, market may deliver a relatively moderate return, at least in 2026, given that it's coming out from a high base in 2025. That said, we also would expect investors to remain rather cautious moving forward. So next thing is looking at fixed income. Fixed income, I think this would be something more for the more income-oriented investors. The fixed income space actually deliver relatively attractive return to date. However, moving ahead as interest rate were to come down, investor would tend to be more cautious, given that income may come down slightly as well. But that said, I think investors, at least investors that has long fixed income portfolio that is tend to have a longer duration would be more skeptical, because more of a time those portfolio with a higher duration would be more sensitive towards interest rate movement. So what can we do moving forward? Understanding that we are in an interest rate cutting environment, is that we can look to actually diversify our fixed income position across the curve. Reinvest maybe those that is within towards the longer end of the yield curve to the shorter end. So maturity, we want to look for fixed income with a shorter maturity in that sense. Some securities with a lower duration. So the next thing, the other I would say asset class that is relatively well talked about is actually gold. Performance has been rather astounding. Gold has actually rallied about 60% year to date. Silver is up. I think as of the last hour when I was looking at the market, it was up over 100% in a sense. Copper is up about 30 odd percent. Why? Is also because they are a natural hedge against inflation. To a certain extent, they do have a low correlation to traditional assets, and they act as a diversifier within the portfolio itself, because they move in different direction as compared to traditional assets. The second thing is, aside from their scarcity in terms of the physical property, because there's only limited amount of metals around the world. Metals like silver and copper do still have industrial demand, which is actually sustaining their value to keep the value afloat to a certain extent. This is actually much more attractive also because at least in terms of silver and copper, they are much more attractive in recent times also because there's an increasingly in terms of the overall adoption for EV as well as the requirement for data center for large computing as well as grid infrastructure to actually deliver to cater to the energy demand itself. So metals itself, aside from their value proposition, they are also coming in from the industrial usability as well as the overall demand. Last but not least, in terms of why, to a certain extent, gold is also so attractive moving forward is because of the declining rates environment. Declining rates along with increasing, or I would say sticky inflation, would actually reduce the overall real yields. So how we calculate real yields is actually taking the existing interest rate, minusing away the current inflation. So that is how we derive our real yields. Then that in that case is actually declining given that where we are in terms of our current environment. This would actually indirectly boost up the demand for gold itself, then therefore pushing up the price of gold a little bit higher. So in terms of the overall summary, what we really want to talk about is that we should be able to expect further easing happening in terms of fiscal year 2026, at least from the G10 central banks. This is what they have actually highlighted, what we can observe in the bottom chart itself. Moving ahead, we should still remain relatively selective towards high quality securities with strong fundamental, not just AI driven kind of companies. We should find companies that has good margins, healthy margins, growing margins, companies that have a strong cash flow that can actually tide through the times of uncertainty in that sense. The other thing we want to look at is that in terms of diversification, not just solely focusing on the US, but we should also look, like as I mentioned earlier, we should look into other regions, other asset classes, such as have a little bit of gold and silver in your portfolio, look into some of the fixed income space, diversify across different regions, looking at some of the Asia market in that sense. The other thing is incorporates. If let's say, for example, you are working full time and investment should take up, let's say, for example, 2 to 3 hours of your time, every evening, times that you want to read about, think about, and conduct your own investment, do incorporate certain systematic approaches to mitigate away certain emotional aspect of things. In that sense, creating a stop loss, understanding that the valuation is relatively peak. What should you be looking into to ensure that when you buy into a certain security, there is at least a certain level of margin of safety. So that's what you want to do moving forward. And I think last but not least, I will end this whole sharing session for the quote of the day is that time in the market still beats timing in the market. On the right hand side of the chart, we can still see and observe that throughout any sort of like market events, up cycle, down cycle, majority of the time the market is still up. The average return is about 151%, while the downtime of about 11 months is actually only about 34% or so. Let me get my laser pointer out to show where to obtain the numbers. Here are they. And yeah, that's about it. So now I'll pass my time over to Mr. Bosch to actually talk a little bit more. Thank you.
Okay, thanks Kaijin for that very wide-ranging updates on the market. Before we let you go, maybe one question. Do you foresee the Santa Claus rally coming in the next few weeks?
To a certain extent, I only can base on empirical data. On an average, there's about 70% certainty that the market will close higher in that sense, about 2% ending of the month. This is also in line with the January barometer, which I think I shared the previous webinar, in the sense that if the market were to end in beginning of the year, January, if let's say they were to close in the greens, we should expect the same in December, at least towards the end of the year, we should expect market to close in the green. And that's based on data. In terms of what can we expect moving forward, aside from the center rally, to a certain extent, I would say is still very, very dependent on the policies that's coming up, as well as the corporate earnings that we can expect moving ahead. Yep.
All right, thanks, Kaijin. I think I'm aligned with you on that view. I'm also expecting a Santa Claus rally this month, especially all eyes are focused on the interest rate decision this week. And you are right, the markets are muted from US to Europe to Singapore this week, and we are all focusing on that number. So besides the point that Kaijin talked about, the geopolitical tension that we need to watch out for in our continent, the Ukraine-Russia issue, let's not also don't forget about the the sort of the US tariff, which the courts have not given their judgment. And if that is uplifted, that could also become another catalyst for the market to go up further. So we look forward to Kai-Jin to come back to our program again to update us with the latest market highlights again. Okay, thank you, Kai-Jin. And next, we will welcome Mr. Brosh from Trendline Group to share with us the corporate presentations from Trendlines. Okay, over to you, Mr. Brosh.
Thank you very much. Hi, everyone. I'm Chaim Brosh, the CEO of the Trendlines Group. I'm pleased to be here, and I want to thank the SIAS for giving us this platform to present. Before we will start, I would like to share with you a short presentation of Trendlines with the hope that it gives an understanding of who Trendlines is and what do we do. So let me, one moment, please. Sorry. Taking on massive markets is one thing. Transforming them, it's another. But that's exactly what we do at Trendlines. Redefining the food dye industry, preventing premature births, ensuring the world does not run out of chocolate. Each groundbreaking solution represents a huge investment opportunity for Trendlines and its shareholders.
At Phytolone, we are producing natural and healthy food colors using fermentation technology to replace synthetic colors that are associated with health issues. We are disrupting the multi-billion-dollar food dye market by creating vibrant colors that are healthy and cost-efficient. On top of that, our manufacturing process is eco-friendly, reducing about 90% of emissions, water use, and land use. So, if you asked me, the future of clean label food is looking really bright.
The healthcare industry places strong emphasis on pregnancy and childbirth, and yet there are 15 million spontaneous preterm deliveries every year. PregnanTech is addressing this challenge with its Lioness device. It's a safe, non-surgical device that has the potential to dramatically reduce preterm births all over the world. This doesn't just ease the financial burden on healthcare systems, but for families like yours and mine as well.
The world has a love affair with chocolate, but today the costs for producing it are too high because climate change, deforestation, pest disease, and labor have created a global shortage. Celeste Bio is at the forefront of solutions to create a resilient, consistent, sustainable supply of real cocoa ingredients. Celeste uses plant cell culture technology to produce chocolate-grade cocoa butter and powder in controlled, optimal conditions anywhere in the world without the need for a single tree. This will be a game changer for the future of the chocolate industry as consumer demand continues to grow.
Phytolone, PregnanTech, and Celeste Bio are just a few of the innovative companies championed by the Trendlines Group. These companies are literally transforming their markets.
We're offering a unique chance to be part of the next generation of medtech and agri-food innovations with our diversified, trend-setting portfolio.
With strong shareholders in multinational strategic corporations like the one here in Singapore, where we combine an Israeli-style incubator with Singapore's intellectual capabilities, the stage is set for explosive growth and success in the medtech field and beyond.
The companies we've invested in have a potential to make a huge impact on the world, and we are giving them the opportunity to do so. Thank you. I hope that this short video gives you somewhat of explanation of Trendlines and what we invest in and why we are excited about our portfolio. We in Trendlines, with our strong leadership, headed by experienced people in the market that we operate in and in the sectors that we are working, together with the diverse board of directors, with some of whom I think you may recognize, like Singh Bunan and Professor Law, who have their extensive experience and business background that assist us on navigating in what we are working on. I think I should have started with apologies for my broken English. So I hope you'll bear with me for my English. So apologize for that.
Mr. Brosh, I think that's perfectly fine. We can understand you pretty clearly. I think we need you to share the to convert into a presentation mode so that we can see the presentation clearer.
Okay.
Yep. Thank you so much, Mr. Brosh. So just to remind you guys again, Mr. Brosh is the Executive Director and CEO of Trendlines Group, and we are very honored to have him today to share with us some of the latest development in Trendlines Group's business.
Thank you very much.
Okay, thank you. Yes.
So before we dive into explanation of portfolio companies, I want to give you some numbers that represent the potential in Trendlines. When we're looking on our market cap or book value, equity, or the value of our portfolio companies based on the IFRS rules, it's already between the $60 to $70 million. While the non-IFRS value, which is the way we and others evaluate Trendlines and the value of our companies, is around $120 million, double than the market cap or the IFRS value of our portfolio companies. The main differences between those two numbers are cases like investment in our portfolio in one of our portfolio companies on a preferred share basis, which according to the IFRS rules dictate between 40 to 60% discount on the value of the deal, or investment by a safe agreements, which I hope that you are familiar with this tool, which the cap on those deals represent the anticipation or what the investors in our portfolio companies believe is the value of the company, while according to the IFRS rules, it does not provide any value to the valuation process. And so we are talking about the way we are looking on the value of $120 million versus 60 to 70 million. And even that, it's not close to the potential of Trendlines. And let's try, I'll try to explain it via one example. We'll take one company of ours, Fitolon. Fitolon is addressing between $4 to $5 million market, the food dye industry. 80% of this industry is controlled by the synthetic dyes and 20% of natural colors. I don't know how many of you were able to track after the changes in the market, but recently they've been introduced heavily that the US market is phasing out of the synthetic colors. The FDA published a ruling to phase out of synthetic dyes altogether. And this is on the synthetic colors which are not healthy, and in the US and in Europe, we're moving out of it. Also on the natural color, just imagine how hard it is to create a red out of beetroot. All the activity, all the effort and cost in order to produce red out of beetroot, and even if you're producing it, you cannot always sustain the same kind of color because the batch of the beetroot this year is not the same as the batch of last year, etc. And we here, Fitolon, create natural color out of yeast. We have 4 strategics already in the cap table of the company, and maybe more to join. And we believe they're all set to dominate this market. So I would leave it to you to estimate what should be the value of our 20% holdings in Fitolon. And how, and through this example, which is only one example of many in Trendlines, you can understand why we are saying, or what we believe, that even the non-IFRS value of $120 million does not represent the potential. We do not control the timing of exits. and it's well known, they say that companies are being acquired, not sold. But from our side, we are doing all we can to get to successful and good exits. We invest in our portfolio companies as much as we can. We are doing our best not to be diluted, and for that, of course, we need a lot of money. We reduced our operating cost by more than 60% over the last few years. Those are the efforts that we are doing. And we are very happy to see that our current shareholder base are happy with what we achieved and did in the last 2 years. We have 40 portfolio companies, 12 of them are in the agri-food area, and 28 in the medical side. 6 out of the 28 medical companies are in Singapore. We are, as I believe most of you know, twice a year, we are publishing the breakdown of our portfolio by subgroups. We spoke before about the value of the non-IFRS versus the IFRS evaluation. Here, you can see the gap and you can see the differences between the two numbers. Fitolon. You saw in the movie, you saw in the short video who Fitolon is, and that gives a great overview of the company. One of our leading food tech companies. This slide highlights the company achievements from proof of concept to major fundraising and collaboration with top food companies. Fitolon is also supported by strong regulatory, including the US ban of certain synthetic, as I explained before, and also in Europe. Here are 4 additional portfolio companies on the agri-food area. Each has made significant progress and demonstrates strong market potential. For example, EBAG, that you can see here, just announced a $10 million raise led by Corteva, a major multinational in the agriculture sector. Or Celeste Bio, who has a strategic investment by Mondelez, and recently published a milestone achievement for the production of chocolate-grade cocoa butter. On the medical side, we have very promising companies as well. For example, Vesimed, that you can see here, uses cryotherapy to treat urological conditions for a large and growing market. The company has secured support from multinational strategic partner and a venture capital fund, both of whom joined the last financial round. And here you can see additional 4 medtech companies, each addressing large market and critical healthcare needs. Escala, for example, is already in commercial and provide a non-surgical solution for public organ prolapse, a condition that affects up to 50% of women who have given birth. Limaca address a critical need for doctors to obtain accurate, timely diagnosis for organ tumors, enabling more crisis and efficient, precise and effectiveness treatment. We have achieved a lot in the last 2 years, and more specifically this year. And we believe that we're equipped now with the aging of our portfolio companies to be in a situation that we will be able to see M&A deals in the coming 2 years. And we are strong believers on our portfolio, and we are very happy to have our shareholder support at this point. Thank you very much. I'll stop sharing and I'll leave it back to you.
Hey, thank you, Mr. Brosh, for that very insightful sharing on Trendline businesses. So we will now move into the Q&A session. And if you are on our YouTube live platform, you can key in your question in the YouTube chat session as well, so that we can answer all of your questions in today's webinar. So with Mr. Brosh on the line, we will move to the pre-submitted questions first. So Mr. Brosh, one of the pre-submitted questions from the shareholder is, how does the company view long-term returns for shareholders who have held the shares since the IPO period?
So the bottom line of what we have done in the last 2 years is what we call focus. We are focusing on one and primary thing, which is large exits from our portfolio companies. And we believe that once we achieve that, once we will show the execution of the potential of our companies, we will gain back the trust of our shareholders. We will be able to show them the returns that they expect, and we do understand some of the concerns that the long-term shareholders has with the performance of Trendlines, but we are excited and convinced that the future will prove that the latest changes that we've done will bring their fruits.
Okay, thank you, Mr. Bosch, for that answer. Maybe if I can expand that question a little bit, would you be able to share some details or colors on maybe the past 2 years' financial performance? Because as investors, usually we want to understand what is the growth or the trajectory like, and maybe in the next 2 years, what is the growth and the trajectory like in terms of the revenues and the profits of Trendline? Okay,
so it will be hard to try and measure Trendlines via the financials of the company, because the main source of income is a valuation process that is being done into our portfolio companies. And as I was trying to explain before, the accounting valuation that we are doing, which by the way, it's being done by external evaluator, not by us, a reputable external evaluator, can give a value to a company which does not necessarily represent the value of the company the way we and investors see in this company. So I would not try to measure Trendlines through what will be the revenue and the profit of the company through our financials. The shareholders should evaluate the company based on the achievement, and achievement for us means exits. Once we'll have exits, the numbers will straighten. We'll be able to see everything. We'll be able to share, to provide, to distribute dividend to our shareholders, which we are planning to do once we have those exits that we're all expecting. From the other side, on the expense side, I think the fact that we did all those efforts to reduce operating costs, which, as I shared before, we reduced it by 60% with all the efforts that we just did now in the last 2 years. And this is the other side of the effort to make sure that we are treating the shareholder money properly, with great care, and spending or using most of the money to invest in the portfolio companies.
Okay, thanks, Mr. Bosch, for that answer. I think that gives us a lot more clarity. And from your presentation, we also understand that Trendline Group is like an incubator and investment group company that invests in up-and-coming technology companies that could have a very good exit or an M&A opportunities that would value the investors or shareholders of Trendline Group. That's how we should value, and that's how we should look at Trendline Groups. Okay, let's move to the next question. You spoke about managing costs and expenses. So are there any strategic plans in place to transform or strengthen the business of Trendline going forward?
I sound myself like a broken record, but I'll repeat it because I think it is important. The way for us to strengthen our strategy is to keep focus. We made a decision 2 years ago to stop investing in new ventures. We're no longer investing in new companies. We are no longer initiating new ventures. We are very, very focused. Out of the, as I explained in the presentation, we have 40 portfolio companies. Several of them can be huge exits for Trendlines. Our ability to invest money in the portfolio in those companies during fundraising process, so not to be diluted, bring us into a situation that on exit time we will not be diluted to 3, 4, 5, or 1-digit percent, but we'll be able to exit on the 15 or 17 or 20% holding, and when the exit will come. And that's the value, that's the strength that we can bring to the company through the ability to invest, keep our holdings in the company as much as we can, and as I said before, exits, focus. That's the strategy. It's tactic, it's strategy, it's everything. Focus.
Okay. Thank you for that as well. I think that gives the investors and shareholders a lot of clarity as well. And Trendline Group is focusing on developing and sort of being able to push the potentials of the existing 40 over portfolio companies in Trendline Groups, and not actively seeking for new companies, but we are trying to see how we can develop these 40 companies and make them to have a good exit so that Trendlines will not be diluted in the shareholdings of this company. Okay, let's move on to the next questions. While share price movement can be influenced by a lot of market conditions, can be affected by US tariff, could you provide some context or certain factors that you think that contribute to the changes in the share price value since the IPO period?
So if we'll go back to the IPO period, from the IPO period until the last year, the company, the share price was reduced significantly. And I think it was driven from two reasons. One is the expectations of the market, of the shareholders, to much quicker exits, which may have been the wrong perspective, because the areas that we are working on, medical device area and agritech, agri-food, are much longer period of time until exits. And because of that, there was lack of confidence by the shareholders, and because of that, and I need to be honest, also by mistakes that the company did. For example, the fact of looking for new ventures over and over rather than concentrate on the amazing portfolio companies that we have, that also led to lack of confidence from shareholders. From our side now, we are focusing, we are putting ourselves very talking about focus on getting the exit, but it's more than that, because now the aging of our portfolio companies is such that you no longer need to wait 5 or 6 or 10 years for the next exit, because many of our companies are in such age or such stage that they are equipped of going to the exit in the coming years. So the time to exit is much shorter, and that's why I believe that we'll be able to gain back the trust of the shareholders. When they see one exit, second exit, they will understand the potential of what our holdings can represent.
Agree with you. I think the focus on having to concentrate on the current portfolio companies that you have to bring them to exits, to bring them to their potential, have really stabilized Trendline business, especially in terms of the capital markets performance the past 6 months and this year, that have reflected some confidence in investors as well. So in relation to this question, the next question that we have pre-submitted by a shareholder is, does yourself feel that the current share price is consistent with the company financial performance, and is there any gap that the management or you would like to address?
So the answer is definitely. As I explained, the market cap range between $65 million USD, USD dollar 65, versus the non-IFRS value, which is the way we evaluate our portfolio companies of 120. And as I was trying to explain through one example, it's not even the beginning of the opportunity that Trendlines represent. So we are confident that there is a huge gap between the current market cap of the company versus where the company can, should, and will be in the future. So no doubt.
Okay, I think I more or less agree with you. Looking at the potential of the companies that you covered earlier, I think if we manage to get them to develop their full potential and have an exit, that could bring a lot of value to Trendline Groups. So we have completed our pre-submitted questions. We will now move on to the live Q&A questions that we see coming in very fast now. There's about close to almost 10 questions. The first question is coming in from one of our viewers here today, Mr. James Chia, I believe, if I get the name correct. He would like to ask that previously there were news on some alleged misappropriation of funds in the company. So is there any updates on this news that a former employee have been alleged to have misappropriated some company funds?
So that was a real unfortunate event that we announced it, of course, a very transparent way. We were very transparent about it. The guy, we are submitting now a civil, trying to go for a civil act against him. Unfortunately, we're unable at this stage to collect any of the funds that were stolen by the guy who is a senior manager in Singapore. He was the head of our agri-food management fund, and it was a really unfortunate event for us. And we did all we can to first we strengthened our internal control activity. And we believe that we closed all the holes that through them he was able to did what he did. And I believe that we should not face anything further like this. But I don't see much hope to get any returns from it, except of the fact of him to go to jail. But that's it.
Okay, thanks for that update. As an extension of that questions, how will this impact the financial positions of Trendline? Will it have any significant impact?
No, at the end of the day, it was not a significant impact on Trendline's overall financials, and we were able to overcome it.
Okay, thank you for that answer. Let's move on to the next live Q&A question. There's a question from Sabani. Trendline shares are halted. Would you be able to advise what the halt is about? But currently, I see that Trendlines is actually trading live. So any information on that?
We just the halt was in order to allow us to announce on a small fundraising that we are doing. We've been approached by few investors, current and new investors in Trendlines who offered us to do small fundraising quickly now, and we accepted it. And that was the purpose of this halt. That's it. So
I see. So nothing to be much of a concern. In fact, it is more
no.
confident boost to Trendline Group, right?
On vice versa, it's not a concern. It's very, very positive. But
Yes.
we had to do the halt in order to allow the process to be finalized and not to impact the trading. So
Exactly. So it's just a normal process when the companies have some significant news to announce, especially in this case where we have a new investors coming in. There's more confidence in the group business. Hence, this halt is actually not something to worry about, but actually a good news that is going to be announced. Exactly. Okay, let's move on to the next question. What is the total shareholder return since IPO? I think let's see. Would you have any comments on talking about total shareholder IPO returns since the IPO period, which I believe should be lower, but
We spoke about it. I think we spoke about it in length. The disappointment of what was in the beginning, and I hope, as I said, I really believe that in the future, maybe even in the near future, we'll be able to see nice returns, and we are committed. We are committed to the shareholders. I mentioned the fact of the cost reduction. We are committed to treat their money carefully, and once exits will occur, they will and will be able to distribute dividend and show returns to the shareholders. So,
okay. Yeah, so I think we look forward to that and look forward to hear those updates from you also in the coming business updates that you have. We have another question talking about your portfolio companies, the 40 over portfolio companies. Would you be able to share if those 40 companies are profitable or at least cash flow positive?
None of our portfolio companies are cash positive. We have few who are already in commercial stage, but they are all startups. The goal of each and every one of those companies is to be acquired by a strategic for an M&A deal or go to an IPO, any other terms of exits. We are not going to hold companies until they will be profitable. It's not our business model. And our business model is to sell the companies for high profits to Trendlines and to its shareholders.
Okay, so in that sense of the business, do you see any of the portfolio companies or the number of portfolio companies that could likely see very good exits in the next 6 months, 12 months, or even the next 24 months?
So we are not going to share information which we cannot share at this point. What I stated, I think in the last several opportunities which I share with shareholders, is that I believe that in the coming 18 to 24 months, we'll be able to see some exits. That's the most I can say at this stage without causing any disclosing things that I should not.
Okay, we do understand that. So there's this question from one of our viewers about schematics GI. So is there any assurance that you can give to shareholders and investors that the potential exit that you talk about in the next 24 months, how would they turn out to be and not something like a schematics GI that will happen? Or you'd like to give some colors on schematics GI developments?
So a good question. It's a good question. And the schematic was an exit that we did a few years ago, which we sold to a large corporation, which with the upfront money from this deal was relatively small, not relative, was small, with the very high expectations for returns from royalties of this deal. And we gave all the assets to this strategic and a huge company, billions of dollars of revenue, that company, B. Brown. And unfortunately, they did not treat this company, this asset, as we thought they will, and the company is actually closed. So we do not expect to get any returns from that. And if we look on lesson learned and we look on things going forward, is that we, as much as we can, we should try and avoid deals that gives us a very small upfront while big expectations for future royalties, because that means that we gave the whole the treatment on this company to help the company to grow. We gave it all to a third party, and it's no longer on our control. And so we don't have the ability to influence the success of the company going forward. So I hope that we will be able to learn from that. But always, as I said before, companies are being acquired, not sold, not sold. So not everything is on our control, but we are definitely taking this experience into consideration going forward.
Okay, understand that. Let's talk a bit more about Trendline business again. We know that it's like an incubator investment group kind of company. In your selection of your portfolio companies at the very beginning stage, what are some of the criteria that Trendline Group look at before acquiring or taking a stake in your portfolio companies?
So I need to start by explaining, as I said before, that we are no longer investing in new companies.
Yeah.
So this question is kind of muted. It's not relevant. We had a long list of criteria in the past while we chose the companies. Actually, we were looking at between 600 to 800 opportunities each year. And out of those 600 to 800 opportunities, we chose 6 to 8 companies to establish in a certain year. We were looking at the size of the market, potential investors, strategics, etc., and those were few of the criteria that we used. But again, it's no longer relevant now. We are trying to focus on the exit, and we are trying to focus on the meetings with strategics, enhancing our relationship there in order to bring them into our portfolio companies for exits.
Yes, I think I do agree with you, but I believe that this shareholder or investors is just trying to understand how Trendline Group select companies in the past so that we have a better understanding of the company. Okay, so let's move on to the next question. Is there any strategy that we can talk about on how Trendline Groups intend to accelerate the pathway of the existing company towards commercialization or exit? Is there certain strategy in that? Do we get in touch with more investors, more partners, or how do we go about doing that for Trendline Groups?
Okay, so we need to start by saying that there are no shortcuts. There are no shortcuts in the companies on medical side, the medical device side, and the agri-tech, agri-food. There's no shortcuts. It takes time for the companies to develop from the development side through the regulation part up until the commercialization, and it takes time. From our side, what in addition to this, to the great support that we are giving to the companies to bring it into the commercialization, we are also heavily involved in all their discussions and meeting with strategics, and that's one of our biggest strengths. We have a great relationship. We can do here a long list of name dropping of everyone in the industry, everyone in the strategic areas. They're familiar with Trendline, they're familiar with our portfolio companies. We are able to bring great strategics into our companies. That's the way to bring the companies to success. Not always commercialization is the goal. Sometimes the goal can be FDA approval. That's a trigger for the company to go and exit. Some companies will have to prove a nice revenue to attract attention of people in the market. But from our perspective, the ability to bring in the company strategics is a goal that helps the company to bring the company to a success.
Okay. So yeah, so I think the question here is trying to understand, is there a certain advantage that Trendline Group has in terms of relationship with regulators, with better understanding of certain regulation in any country, be it in the area of agri-food or medtech, that could help this portfolio company develop further? And one of the things that you mentioned was the FDA approval, which is one of the criteria to help this company grow. I think that is a very positive sign that Trendline Group are able to identify such critical areas that can help the companies and thereby developing them further. We still have about 1 or 2 minutes before we end this webinar, and I'd like to share this 1 or 2 minutes with Mr. Brosh. Is there any other things that you felt that shareholders should be more focused on about Trendline Groups, and what can we look forward to in the year of 2026 for Trendline Groups?
Okay, thank you. First, again, I would like to thank the SIAS for giving us this platform and allowing us to speak directly with either current or future shareholders of Trendlines. The one thing I want people to take out of this meeting is to understand the potential of what Trendlines can be and what it can mean to them. What it can mean to them from here forward. The the ability of us first to give a good returns for those who have been with us for a long time, and we would like to honor them and to appreciate them for staying with us, but also for newcomers. Look at the potential, look on what we can achieve, and I hope we'll be all very happy in what we will do in the coming few years, and maybe we'll be able to be shown in the graph that your peers showed a few minutes at the beginning of the presentation. Great growth. That's what we're looking for.
All right. I think looking forward in 2026, economy still looks very strong, at least in the US macroeconomic sort of numbers are still looking very healthy. We still have the Fed rate cuts coming up. And I think we are also looking forward. I'm personally very excited, not only about Trendline Group, but their portfolio of companies that are going to be a sort of being pushed up to more to develop them further. I think we do look forward to you coming back in the next business update to let us know is there any further developments on Trendline's business. So we'd like to thank Mr. Brosh today for sharing with us Trendline Group business. We do have a much better understanding of where Trendline is heading, and we have come to the end of this evening Corporate Connect webinar. We hope every one of you do find this session very useful and informative. And in case if you miss any part of today's session, you can always rewatch this on our SIAS YouTube channel. And you do also visit our website to get updates on the latest investor education program that we have for you. Our next Corporate Connect session will be the last one for the year 2025. That will be on next Tuesday, 16th of December, featuring IHH Healthcare Group. So do remember to register and sign up, and I hope to see you there next week. So thank you once again for joining us this evening. Take care and have a good night. Thank you.